My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Gang, welcome back. Today our special guest is Bronson Hill, zooming in from Los Angeles, California. He survived the fires of not that long ago, and he is a very, very active, passive investor. So by that, I mean that Bronson has been around real estate for a long time. He's been very involved in real estate syndications and multifamily, and these days he's doing alternatives to alternative investing, and he's looking at different opportunities that cash flow. So Bronson, welcome to the show.
Dave, excited to be here, man. You've done this for a long time and you're doing a great job. Love to add some value today.
Well, thank you very much. So Bronson, give us a little snapshot of what you do as of getting towards mid 2025 right now. What does real estate or what does investing look like for Bronson Hill? What do you focus on?
Yeah, so we have our background really has been multifamily investing. We have 2,500 multifamily units we've done. We've sold some of those. Some have done phenomenally well. Some have not done as well. There's three reasons people come to us. One's for cash flow, for appreciation, or for tax benefits. And real estate it's been very difficult to find cash flow. So we've kind of gone into other things to find cash flow. So we're doing a lot in the oil and gas space. We're actually doing some real estate where we own mineral rights of the land. So we own the land where oil and gas is being drilled. So that's kind of a unique play. And then we're buying businesses. So we're doing kind of a couple different things to provide cash flow, tax benefits to investors. And then we're always looking for real estate. It's just, finding the time that makes sense. We've seen just incredible pain in the commercial real estate market. We've had, properties that we bought that, 24 months after we bought them were worth 30-40% less than when we bought them.
Wow.
And so that's a very painful thing to go through. And a lot of people have experienced that. So it hasn't affected single family, at least in the US, in the same way. People have these long-term, mortgages versus a lot of commercial real estate is every 2 to 5 years, 10 years, this stuff comes up. And so there's been a lot of turnover and it's just been challenging for a lot of folks.
Yeah, well, let's talk a little bit about that. And then we'll talk about how you've pivoted to other completely different asset classes.
Sure.
So, yeah, tell me how you so first of all, let explain this. Are you a co-GP on some of these deals? Or are you primarily just a passive investor or a...
Yeah, I'm both. I'm a co-GP, so I help, kind of some with the management or helping be a part of the projects. And then I also invest my own funds as well. So I'm both.
Yeah. Okay. So in the co-GP space, there has, especially with multifamily properties over the last few years, there's been some challenges. So maybe how do you navigate it when things go awry? Like how do you...
Yeah, so I'll just share honestly. I think it's good just to kind of give a picture of, behind the curtain. There's everybody loves to talk about the wins, but talk about some of the things that have happened that have not gone well. So we've had some home runs. We've had deals that have just done phenomenally well, 100% returns in 12 months and things that sometimes the market kind of does certain things. Some of the issues that we've had a couple of properties where the debt that we got was bridge debt, and we thought, oh, we're going to be okay with bridge debt because it's 2 years, but we can extend it to 3 or 4 years. But and a lot of the what I saw as the margin of safety would be that we're going to do all this value add. We're going to come in and do all these renovations, and which works in most scenarios. But again, when you have this black swan type of event where you have the fastest increase in interest rates in 45 years, that's going to cause some problems. So what happens is when you go to refinance or extend your loan in 2 or 3 years, they say, well, you can't, you don't have the value there. Your property, no matter what you've done, it's still worth substantially less than what you paid for it. And so some of these projects were they had too much leverage in them, right? So a couple of them, and we work with partners, so we're involved, but we're also, looking at different things. So I think that's something that I really learned is, the value of long-term fixed debt. I mean, typically deals in real estate fail a lot of times it's on the commercial side because the debt is not in the correct fashion. I don't know if your experiences or you've seen the same, but it seems like, having longer term fixed debt, even if you pay prepayment penalties, which is what happens if you have to pay off a loan early. So let's say, and we paid millions of dollars of prepayment penalties where, but I'd rather pay those than have to be in a situation where the value is gone and you were 20 or 30% down, and all of a sudden your property's worth less than what you paid for it. And your
Yeah.
equity investors are like, where's the equity? You're like, well, it's actually not there because the value is down. So those were pretty painful, and having conversations with investors to kind of share that. But I think that what it really allowed us to do is to shift into some other things. But I do think that, on the real estate side, there's always opportunity. But I think in that situation, the easiest time to raise capital, which is really what we do, we raise capital for different types of deals. The easiest time to raise capital often is actually the worst time looking back to raise capital. So we've had times where we've raised $8 million in 24 hours, and we probably could raise 15 million for that deal, and the deal turned out okay. But that was just a time where everything was super hot, and so now we're actually seeing some pretty good deals out there now. But it's harder to raise capital for those same deals because people say, I don't know, real estate, multifamily, I'm not sure. So it's funny how
Yeah.
times can change and things go in and out of favor, which is interesting.
It is. Human psychology is so interesting. It is.
Yeah.
And I talk about it like it's other people, but I've fallen into the same thing. It's like human nature. It's just we want to get on the gang, no, on the bandwagon with everybody else when things are way too hot, and then people get scared. So we do exactly what Warren Buffett says not to do, right? So
Right.
we get greedy when
Yeah.
everybody else is greedy. We freak out when everybody else freaks out. It seems to be that human nature thing. So I
Yeah.
appreciate you opening up about that. That must have been it must be well, I've been through this myself. I know. It's an absolute nightmare to have
Yeah.
to go back to your LPs and your investors and say, oops,
Yeah.
deal isn't working out the way we thought it would. So what have been some of your takeaways from those conversations and keeping people
Yeah.
kind of
It's really interesting. My background, I was in medical sales for 10 years before that. I was a youth pastor. So I worked with a lot of, kids, and so I just try to help people. And so to me, my primary motivator is not money. I have big financial goals, but it's for giving back and other things. But it's just interesting when you talk to people, like a lot of people are very understanding. Some people get very upset, and it's very understandable. It's investing. But this is, I guess, the part of raising capital that people don't really talk about. They just, oh, you raise millions of dollars, you can leave your job. It's great. I wrote this book, Fire Yourself. Here's how you do this. Here's how you leave your job. But at the end of the day, I mean, those are, people work years for money. And sometimes
yeah,
it's, hundreds of thousands or millions of dollars. And it's hard when you say, hey, this is at risk, or, this may be, we don't, we haven't had losses per se, but these are things that could turn into losses for sure. Actually, we have had losses on one deal, and that's hard. Those are hard conversations, but I think it really separates people. It really builds trust, I think, in a way too. If you can just show up and say, hey, this is what happened, or we talk about it openly, right? A lot of people don't talk about this, but it's
yeah,
happening. And I think the
yeah,
problem is when people don't talk about it, you start to lose credibility, because it's like then people think everything's pie in the sky. So it's when you've been through times where you've had challenges, those are learning opportunities. And even Warren Buffett, and I quote him a lot, he says the best investment we make is in ourselves, right? So if we go through something, what if life is happening for us and not necessarily to us, right? We're not
yeah,
victims of it. We're there to learn and grow no matter what age we are. Obviously I'm 44. If you're 80 years old, it's a little different, but even then it still happens that we can teach those things, we can learn them. And so I just try to lean into life and learn those lessons and even have those hard conversations. And no matter how it turns out, again, some people are very understanding, some people have been not very understanding, but in a way it kind of enlarges your soul. So there's kind of a personal development piece of all this, and
yeah,
realizing I'm not calling somebody and saying, hey, you've got 6 months to live or something, or 6 weeks to live. Like that's a tougher conversation, right? So this is,
yeah.
at the end of the day, it's money. You can make more money. We have to trust that it will work out somehow, but money's a funny thing and people get very emotional over it.
Oh, we certainly do. Well, thanks for sharing that, Bronson, for sure.
Yep.
Now, it sounds like, you've been through challenging times with commercial real estate and multifamily. It's tough to find, well, actually, it's getting a little easier nowadays to find deals that make sense because unfortunately some guys are losing, having to sell for a lot less than what they paid for it. But you're also moving into other asset classes. So maybe walk me through that. How did you decide what to pivot to? And how do you shortcut the learning curve? Because you spent years in multifamily, jumping into a completely different arena like oil and gas or the other things that you're investing in. There must be quite a learning curve there.
Yeah, well, I think in my book I talk about this. I have a funnel on how do you analyze any deal, right? So once you kind of are used to real estate, I'm sure a lot of your listeners are real estate investors. You know that hey, you look at this, and I've got to have this much profit, and here's what the deal costs, and here's the expenses, and you kind of figure that out, right? So as you get to larger deals or other types of deals, it works very similar. So I basically have kind of a three-step funnel where the first step really is what sort of industry or what sort of asset, like what is this in? Is this a growing asset? So for example, if I'm in a certain market with real estate, I'd say, well, is the population growing? Are the jobs growing? Is the income growing? Well, those are all positive signs, right? It's the same though. If you look at different businesses, we were going to buy an e-commerce business up until the China tariff thing kind of started happening here, and so we've kind
Yeah.
of put that on pause, which was disheartening. But you'll find every single thing, whether it's oil and gas, you'll have a certain market. So what kind of market is it? Is it a growing market? Does it make sense? Is it investor friendly? Then you go down one step below that. Then you say, well, who is the team that's actually going to be operating this, right? Who's the team? Is it, do they have this experience? What are their values? A lot of them, I think we all have the same values, but then some people want to raise money and never talk to investors again. And that's just not, to me, that doesn't really work well. It's, I want to be able to call and reach out if somebody needs something and have that relationship with investors. So really making sure the values are aligned. And is this a rinse and repeat type of deal? And then it's only the bottom step, really, you actually get to the deal specifically itself, right? So you ask yourself, does this deal actually fit, my goals? Do I actually, if I need cash flow, is this a long-term appreciation deal or is this a tax play when I really need something different? So I think it's really kind of analyzing it on those three levels and making sure both, are all three, the market, the operator, and the deal itself really fit where you want to go. So if you use that model, kind of no matter what asset you're looking at, I think it's very helpful just to understand where you're going. And then I think one question I really try to ask in that process is what do I see as the primary risk of this deal not going well? Right. And
Mm.
because, there's always way, all sounds great and the presentations all look great and the webinars, whatever, but like there's always the way you could lose money. So what's the way you think it could be? And then a lot of times I'll ask the operator, hey, what do you think is the biggest risk of this deal? And it may be different than what I thought.
Yeah.
And I just think having a good understanding of what you think the risks are. And if you don't see a risk, then you probably haven't looked hard enough, or maybe it's time to spend a little more time and just look at some other deals because there's always risk to investing for sure.
Yeah. Well put, Bronson. So when you're trying to figure out if the operator's values align with yours, like how do you do that? Because everybody talks a good talk and everybody's website looks good and everybody's values and mission statement is all sunshine and flowers. How do you dig below the surface and figure out what's the reality?
Yeah, it's a good question. I try to ask a lot of times. I have a call with, I'm a passive investor as well, so I'll have calls with other sponsors. I'll kind of ask questions, and you kind of get a sense of what they value based on what they have on their website, what they're saying. For me, and I think it really helps as an investor if you have values. What do you value when you invest? So for me, it's kind of the same in our business as well as how I invest. It's really the three things: being conservative on the underwriting, so not looking for best case scenario, what's kind of a real world, or even what happens if things don't go well here. Being very transparent in communication. I think operating groups should be, hey, here's what's happening, and you don't hear about it 6 months from now that it's been going on for
Mhm.
6 months, and you're just hearing about it now, right? You should hear that right away, and if you ask questions, you should be able to hear it. Then the last one really is the idea of partnership, right? That you're actually a limited partner or a general partner, that you're actually partners, right? You're not just in this and you put money in and you never hear. So again, they're kind of all tied together, but a lot of it just comes down to integrity. And so, I'll talk to other investors. Sometimes I'll do a background check on somebody. We've got a group that we're vetting now that's not an investment group, but they kind of are an equity broker. They kind of like are a consultant for buying businesses. And so I've had some questions. This just happened the last couple of days. I had some questions around their integrity, who they are, who are their values, and some questions have come up. And this is a little tip for investors of how to use AI in your investing. If you
Mm.
take an investment deck, like a spreadsheet or somebody's website, and you put it into Chat GPT and say, give me some, like, what are some things that are concerning about this, or what's missing here, or whatever. You could take a 100-page legal document, their PPM or their presentation. It'll give you feedback, questions to ask, whatever things to be concerned about, whatever. And it'll just like really guide you through it. So it's something that you can use. So that's one way I use AI in my business. But I just think, again, analyzing that and listening to what they're saying, asking questions. If you can talk to other investors that invested, over the last several years at least, that's really helpful as well.
Wonderful. Bronson, you're also a fellow podcaster. Tell me a little bit about your show.
Yeah, thanks. So we have a show called the Mailbox Money Show, Top 1% podcast. We talk about different assets people can invest into. We also talk about personal development, but it's really how do we start to develop? I think the goal, again, a lot of times we think we're being passive in our investing, but yet if we couldn't, one test we use is if you can't 10x what you're currently doing. So if you have three or four rental houses like I did, if you couldn't very quickly go to 30 or 40 rental houses and manage them just the same, then we're actually not doing something scalable. We're not valuing our time. So this is really the conversations around what we have is just bringing in experts and talking about how do we grow wealth without taking up more time.
Very, very cool. Now, I'm sure a lot of people are listening or watching this and they'd like to find out more or connect with you. What should they do?
Awesome. Well, I have this gift for your audience, Dave. Really appreciate you having me today. It's called How to Use Inflation to Your Advantage. It's a 30 plus page PDF we'll send to you. And it basically involves, using real estate, using debt, also some unique strategies that I use, buying precious metals, borrowing against the value of that, using for liquidity and buying other assets, or just some creative things you can do. If you text the word inflation to 33777, the word inflation to the number 33777, we'll send that to you. We'll ask for your email, and then it will send you that as well as let you know what we're up to. And then I'm sure we'll have the links for you as well for the landing page. If people just want to click on that, they can go there as well.
Cool. And for folks that are listening to that, what's the best website for them to go to?
Yeah, so it's bronsonequity.com/inflation. So that's our website, bronsonequity.com/inflation. Yeah.
Fantastic. Bronson, thanks so much for being on the show. This has been great.
Hey, thanks so much, Dave. Appreciate you.
All right, everybody, take care. We'll see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.